Okay. We are live on YouTube as well. So let's get started. Hello, everyone. Welcome to another session of the Alt Extra webinar. You might have seen it already, but SEBI and RBI have been very, very active in taking regulatory action on some unregulated platforms or unregulated practices that are happening in the market. And rightly so, they are done to protect the interest of retail investors in the market. But even then, and I say this from experience of running a community of 1,500 people, we see investors blindly invest in a lot of unregulated platforms and structures as well. So, via this webinar with Anil and Vaibhav, we're going to discuss the downsides of unregulated platforms as well, and how you can check or evaluate certain things before making your investments in any sort of either regulated or unregulated products as well. I'll quickly introduce both these gentlemen for you. So, Anil Choudhary holds a LLM degree from Harvard Law School and is a BA LLB has a BA LLB on honors degree from Nalsar, Hyderabad. Anil has worked with leading law firms in Delhi and Mumbai and has substantial experience in areas of capital markets and securities law. He's also admitted to practice in New York and is a member of New York Bar. I don't know why you are here in Mumbai, Anil, but very impressive. Um, Anil has advised some of the largest corporate houses and investment banks in the country for a variety of corporate and capital structure or capital market transactions. He has also co-authored a book uh, by the name of Securities Regulation, Primary Market Offerings in India, which covers the concept of securities and primary market offerings in detail. So very, very impressive and welcome, Anil.
Thank
Um,
you.
uh, we have Vaibhav. Vaibhav Laddha is the CEO of Grip Invest. Grip Invest is a high yield investment platform offering fixed income investments to retail investors starting at just 1,000 rupees. Uh, Grip is one of the leading OPPPs and also one of the founding members of OPPP Association. Vaibhav, over the last decade, has held leadership positions, scaling early stage startups both in India and the US, focusing on creating structured financial products, accessing the private wealth ecosystem, and building consumer brands. He holds an MBA from the Darden School of Business, University of Virginia, and is also an alumnus of IIT Delhi. So, Vaibhav, pleasure to host you today as well.
Thank you, Yash.
Awesome. Okay. I'll just set some more context for our audience. So, this is a fruitful webinar. You have already seen some instances where SEBI and RBI have taken regulatory action and issued cautionary notices. In some cases, it was the creative interpretation of regulated products like P2P. In some cases, it was issuing a cautionary notice for investors to beware of unlisted equities or unlisted bonds, or in some cases even upbringing more guidelines like the SM REIT framework that SEBI has brought in to regulate the fractional real estate market. So SEBI is very clearly very active in the market and is taking a deep interest as to how the next wave of investments are coming from new age retail investors as well, and is actively trying to protect their interests as well. So message is very clear from the SEBI side. And today with Anil and Nikhil, Anil and Weber, sorry, we'll talk about the regulatory framework introduced by SEBI on various different alternative investments options, and also the downside of investing in unregulated products, which is curated by Alt Investor. Alt Investor runs India's largest community on alternative investments. The Alt Extra series is proudly powered by Grip Invest. Alt Investor runs India's largest community on alternative investments. I am Yash Roongta, and I am your host for this webinar series. While I do discuss some key questions that I have drafted for Anil and Weber on this topic, wherever you're watching this live, whether on YouTube or on LinkedIn, there will be a chat box. You can put in your questions there, and we'll pick them at the end and get them answered from either Anil or Weber. So yeah, do stay tuned in and do keep it very engaging. Put your questions in whenever you feel you need to ask it. So okay, lots of housekeeping done. Let's get started. Ready, right? Weber and Anil, all good?
All
Okay,
good.
awesome. Anil, Anil, let's start with you. You're the star guest. So let's start with the regulatory bodies as well. How has your experience been working with SEBI or RBI on any sort of regulatory issues? And because maybe you've worked with them so much, what's their thought process generally when they have to think about, hey, we should probably regulate this product or platform or this market or this?
I've been dealing with SEBI mostly past 15, 16 years now, and also dealt with RBI. But see, SEBI, what has happened in the past 5 years, especially post-COVID, has been very active on regulating this platform, the digital products, the digitization once it has happened. See, we as a securities lawyer, we deal with SEBI on three fronts mostly. One is SEBI as a regulator, which SEBI regulates like brokers, investment banks, if any registration of mutual fund, AIFs, etc. All kinds of investments they regulate it. They're a regulated entity. Basically, they regulate all the market intermediaries. B, then they are also the enforcement agency. They also enforce action and take action against any person who is not who's violated the securities law. And three at the policy level where the laws are drafted, the regulations are drafted. So SEBI has been much more open about its rule making as opposed to other regulators, even government bodies for that matter. So if you see all this from a regulatory standpoint of view, SEBI always comes up with consultation paper before they come up with law. If you see recently also all this insider trading regulation just got amended yesterday. That was followed by a first consultation paper. So SEBI takes this regulating by way of consultation paper, getting feedback for the market intermediaries, stakeholders, and then regulate the practice. And for especially for fintech and the new age alt investing kind of platforms, classic example is what Vaibhav leads OBP platform. Uh, how it got regulated? There were earlier, platforms who used to sell this bonds on their platform. So we found that there is a need to regulate it. Even companies want them to be regulated because they can easily secure funding once they are regulated, because the regulator actually gives them a framework under which they can operate, they can manage their risk better, and also scale up and raise investments as well. So from that point of view, SEBI came up with a consultation paper and also discussed with the current that time operating platforms who were selling these bonds, and then came up with a regulatory architecture governing OBP. Similarly, for small and medium price REIT, that was fractional sales were already ongoing. There were platforms who were doing it. So we thought, okay, fine, it's a good product. Let's not say that it's not permissible or will not allow it to operate. We'll regularize it. Certain things they're more open to regularize and making it a law and create a legal framework around which all the entities can operate, and rather than everyone follow their own norms. So SEBI overall has been more cooperative to the fintech. They have actually came up with the regulation in consultation with this thing. And of course, once the regulations are formed, SEBI becomes a different beast. Once the regulations are
Hmm.
formed, and then you don't follow the regulations to the T, then they will come at. That's why enforcement is very hard. Enforcement, they will come like recent actions. They just ask you to shut down. So that is where I think the balance lies. Regulations, one is making laws, B is enforcing laws, and SEBI does both. So that's why we have to be careful.
Okay, awesome. You mentioned SEBI regulates by consultation papers. They float out the consultation paper first. In your experience, when somebody files a response to the consultation paper, how receptive are they generally? Like, do they really go through all those responses that they get and then form a carefully drafted policy, or it's a bit more I feel SEBI feels that this is right, they should do that, something like that.
Very difficult to read the mind because I don't know what entirely they do. They just throw it in the dustbin or actually review it. But I assume that if they're doing it, then they'll do it for a purpose. They would be certainly
Hmm.
take the feedback, at least for OBP, SME, we know as a matter of fact, they took feedback from the existing players and how would they want to be
Sure.
regulated. And to that extent, of course, these consultation papers are kept in mind, but they, of course, they know who's sending that consultation paper. They always take it with a pinch of salt. Like if the OBP
Sure.
platform itself is sending the sending the recommendation, they would know, okay, I need to concentrate on investor protection here. They will not be caring about
Hmm.
that. That's my job. and maybe a retail guy, they would sending in that they said, no, 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 they will be saying that everything should be regulated. That should not be the norm. So point is SEBI has two functions basically in terms of SEBI Act preamble as well. Protection of
mm,
investors. Investors' interests should be protected. The retail guys, the last mile person who's investing 1,000 rupees on Vaibhav Laddha's platform should be protected. B and B on development and of securities market. That also is part of their ambit to develop the
right.
securities markets, not only regulate and impose penalties and make laws, but also to develop. I think they kind of balance both to make new laws to ensure that new platforms come into being, but also at the same time protect the interest of the retail investors.
Yeah. Uh, Yeah, I would just like to add on that. So,
Sure.
as far as our experience goes with, OBPPs and OBP association, yes, even before the consultation paper, on several of the occasions, SEBI has actually asked for us to submit a draft proposal through the association. So it's not a
Okay.
consultation paper and then we give feedback and then the final circular comes in, but they have periodically asked for submission of such drafts and proposals from the association so that they can take a view on it. And yeah, so it has been quite streamlined in that way. Not to say that there have been, like I was saying, not to say that there have been, like it's always in favor of what we want, but yeah, it's a fine middle path that we
Balance.
get
Yeah.
with SEBI. Yeah.
Okay. Awesome. Good to know. Good to know that the market regulator is active in taking feedback also. Anil, coming back to, let's say, only the world of alternative investments, can you tell the viewing audience which products are regulated right now in the alternatives category and which one are unregulated? Or maybe if you just mention
Alternative.
the regulated ones, then everything else becomes
Yeah,
a
yeah,
breeze.
yeah. I don't think- see, in terms of SEBI regulated investment products and for that matter RBI, SEBI mostly, if you see mutual funds, start with that, that's the highest regulated. Then there you have PMS where you can invest through PMS. Then there is AIFs, alternative investment funds through which you can invest. Then there is OBP, which is now SME REIT, which is now REITs, InvITs, which are investment products in itself, pooled investment vehicles. So there are very variety of registered products. Platforms are different. Platforms can each platform can come up with all. Let's say, for example, a large wealth management firm for a Kotak or any other GM Financial, which has license under merchant banking as a license stockbroker as well, license as well. They run AIFs as well, PMS. They do everything. But a one platform, single platform can give all the regulated products. So I think what SEBI does as a regulator, they regulate products and regulate intermediaries. Platform is only one or two. If you say OBP is a platform where you are basically a via media, a broker in the middle between the investor and the actual manufacturer of the product, which is the bondholder. Or the manufacturer or the company, issuer company. That is where the difference lies between what SEBI, what they regulate. They don't regulate product platforms as such, like a stock exchange may be a platform, OBP may be platform. But apart from that, most of them are products, and you have to register as yourself as a category in that product, and then of course you are regulated by SEBI. So these are the various kinds of products by SEBI. Then there are of course peer-to-peer lending, etc., which is governed by RBI. So these are typical
Mm,
products which are governed and regulated by SEBI. Now there are products which are not regulated, but investments happen. Crypto is a classic example, which is remain unregulated for a large part, and there have been actually a conscious decision not to regulate it, rather than not that fact that they are not aware of it. So sometimes the regulator is actually the government call, not a regulator's call, that we will not regulate the product, we'll tax the hell out of it, that people don't do it. But we don't want to be
right.
the person, company, because it's a nation issue that only country which is banned crypto is India. So you don't want to be seen as a country where crypto is not allowed to be bought and sold. Then there are other, other products which are, unregulated or at borderline illegal. Sometimes like all the CIS schemes that people come up with.
Mm,
There are property CIS schemes which have been done in the past. So which are borderline illegal and from that point of view unregulated. So there can be products which are platform is when the person is viewing or investing, they should not only look at what platform it is what the product they are
mm,
buying. and whether the product itself is issuing by an entity which is regulated or not. And if that entity is regulated by as an AIF or they're selling PMS, so you have to match the
Hmm.
regulated entity and what product they're seeing. There's a matching of that. So an investor,
Hmm.
whatever, when you're buying any, investing 100 rupees or 1,000 rupees or 5,000 rupees in something, you should know what you're investing in, not only the platform but also the product that you're investing in, and whether the product, if there's anything wrong, where you can go, then that means there is a that product is regulated or unregulated. That if a crypto, if a stolen crypto, you can't do anything. Some
Yeah.
if a broker, you lose money there, you can't go. And because in an exchange equity market, there's an established arbitration requirement, established way of how to go after your broker if there's something goes wrong. So in a unregulated like a crypto or any other platform, the investor don't have no basis. They just lose the money, and then you can file rates, go to civil court. Nothing will happen for years. So that's the point the regulator has been done this, because for 1,000 rupees investment, no investor will take the effort of suing or taking in money or taking on the platform, or because they're so dispersed, maybe 100 crores of exposure, but everybody holds 10,000. Nobody will come together to fight that case. That's why the regulators are there. Regulators are there to protect the
Yeah.
retail investors who cannot go and fight for their own cause. So that is where I think people have to draw the balance as to what product is you are buying, what is regulated, unregulated.
Got it. No. Okay. Very helpful. Um, okay. Weber, we have talked about OBPP regulation a bit. I'm going to come to you because you have an OBPP license. Can you explain to the viewers what is the OBPP regulation? And because, unregulated structures are also there, but you chose the path to get regulated. How long did it take for you to get regulated as well? Uh, so yeah, you can you talk about that a bit more?
Yeah, sure. So starting with just OBPP, OBPP is an abbreviation for Online Bond Platform Providers. Um, so online bond platform providers. So this is a regulation that regulates any platforms who offer offer corporate bonds digitally on an online platform. Let me just take a step back on the genesis of it, right? So corporate bond market is a very large market. It's a annually $100 billion of bonds are being issued. However, this has been primarily dominated by institutions. So it was an institution only market. But in the last 3 4 years, the demand for these high yield corporate bonds have increased in the retail investor audience as well. So but the market was primarily made for institutions, so it was not made for low ticket sizes, convenience, security, etc. And so new fintechs arrived on the scene like Grip Invest to address this need. And as the retail investment started growing and it almost touched like $1 billion in investments, SEBI took notice and came up with this regulatory regime called OBPP, which, as I said, regulates all online bond platform providers. And it was a revolutionizing step because it brought a lot of regulatory clarity to also operators like us on what we can do and what we can't do. And like the biggest topic that you are doing today is that online OBPPs now can offer only regulated products and not unregulated products. Like Anil was saying, that the regulator actually regulates products, but in this case, even platforms are regulated. An unregulated platform may offer both regulated and unregulated products, which has its own downsides, and maybe we'll discuss that. But OBPPs by regulation can only offer regulated products. Now that is a huge statement and a huge thing, because once you come to an OBPP, then you can be rest assured that only regulated products are being offered. The other big thing that happened was the entire security. So before this, it was an over-the-counter market, and the counterparty risk was very high. Now all transactions happen through the exchange, so there's no counterparty risk, and all settlements happen on T+1 settlement date. So I think these two are the like very. There are a laundry list of things that came about with OBPP, but these are probably the two major things. And of course, that led to user convenience, transparency, price opaqueness was gone. Different payment mechanisms came up. So overall, I think this regulation has been phenomenal for all online bond platform providers, and it also brings a lot of clarity as well as security for the investors. To your second question, this regulation came about in November of 2022. So, I mean, practically 2023. It took us about 4 to 6 months to get this license, and we were one of the first ones to obtain this license. However, at that time, see, a regulation came, but a lot of other things like the payment infrastructure, payment gateway integration, NSE RFQ integration, all those things we actually worked with the regulator and the exchange to put in the shape that it is in today. Um, I I hope or I believe that the process is becoming more and more streamlined with every passing day, and I think getting this license will just become easier and easier as we go along. On your last question, why did we do it? So we would always want to be under a regulatory regime, right? Because it was not by choice that we were unregulated before that. But before November 2022, there was no regulation that governed such platforms. And as soon as it came, we were the first ones to apply for it. Our firm belief is that if you want to build, large business or touch upon large target audience, then it has to be on the right side of regulations, and the clarity just does that for us.
Okay. Okay. No, thank
Yeah.
you, Weber. No, very helpful. And it took you 4 to 6 months, and then you still chose the path to apply for it. So, no, appreciate that. Anil, from your perspective, then, I mean, of course, GRIP is now a regulated platform, and so are many other OBVPs. But if a user still chooses to invest on an unregulated platform, and for whatever reason they lose money, do they have any recourse with the regulator per se, SEBI? I mean, because I'm asking that this example, maybe you've heard of Gropital, which was declared as an illegal
Yes.
CIS
Mm.
scheme. Somebody complained to SEBI, and then SEBI took action at that point of time. And all that money right now is sitting in an escrow account, I think around 52 CR worth of money, but there's a case ongoing in Securities Appellate Tribunal. Point is, will SEBI still entertain any complaints on the unregulated platforms, or SEBI will say, "Hey, you didn't listen to us. You made a mistake. Now you deal with it." Something like
It depends on the what the violation is. See, SEBI has a jurisdictional issue. SEBI works under the
that.
aegis of the SEBI Act. SEBI Act is the primary regulation. And in terms of the SEBI Act, SEBI has been given the powers and to enforce laws in relation to securities market. Or in the sense like Gropital example, if you see, they come under the definition of collective investment scheme. So an
Mm,
if a platform is carrying out a transaction which is in violation of SEBI laws, of course SEBI can intervene because SEBI is the regulatory body towards enforcing any violation of securities law. But for example,
mm,
there is a product which is not out of the securities law domain, which is something in a let's say banks related to banks, related to some deposit, come some invoicing, some come something. So which is may not come under the definition of SEBI.
okay.
So if it does not come under the regulatory domain of SEBI, SEBI cannot take any action against them. So from that point of view, it depends
Mm,
on the which branch of governmental agency that violation falls into. So for example, like crypto, if there's any violation of if something goes wrong in crypto, you can't go to SEBI, you can't go to RBI. Everybody has washed their hands off. You can go to court and then take
mm,
somebody from civil court, something that you can get from a contractual point of view. So point is that it all depends upon what that platform is selling, what is the product they are selling, and depending on the product, which is the regulator who should have regulated that product. If that product is legal, illegal, or is it completely uncharted territory, nobody, let's say crypto, nobody, RBI, SEBI, nobody will take onus on that. So it depends a lot on the product also. I think we've lost him. We'll just wait for Yash to come back.
Yeah.
Yash, are you there? We'll wait for Yash to join.
Sure. Though on that,
Yeah, let's continue.
yeah, until Yash joins. So on this point, this is an important point. See, I also hear a lot of times from our investors, that there is a product, and since SEBI only regulates securities, right? So there are a lot of products that are not securities and hence don't come under SEBI's purview. Now, an investor's dilemma is that I don't know whether it is regulated or unregulated. It is unregulated, but what should be the takeaway? Because it is not under SEBI's purview, it can't be regulated by SEBI. And that is like a gray zone where no regulator is regulating those products for some reason or the other. And how should investors look at it?
Yeah, again, that's I think very important question. Like a digital gold. Let's say digital gold was something which is not regulated by SEBI or not regulated by RBI, who typically it's not a security, so can't be SEBI. RBI also says that gold I don't touch. So from that point of view, there are, of course, there are gaps where there is no way, but the contract will, law of contract will apply as to what you said in your as an investment pitch or what you disclosed on their website based on which people invested. Then it's power of civil court and criminal, of course, actions can be taken, but there's no regulatory body will come and help you in that matter. And
Yeah.
in cases where there
See,
are, sorry.
and yeah, in this case, the grievance redressal has to be started from the whiteboard because the framework is not there. I think that is the issue with such products.
And that is the reason what SEBI has done. If you see, SEBI came up with a circular to say that no regulated entity, even for OBP, they say that you cannot do unregulated products. Because what happens if you are a regulated, if a stock exchange starts selling digital gold, if brokers start giving digital gold, then people will think that this is also regulated. So what SEBI has done is that if you are regulated intermediary with me, you cannot then sell unregulated products, because then what will happen is the investor would think that this is regulated, and that's why a broker is offering me the securities or offer this product that has to be regulated. So that is where I think SEBI has taken a conscious step to tell all these platforms and market intermediaries not to offer unregulated products to their investors, so that investors don't get fooled that this product also is regulated. Everyone has to do their due diligence. I think investors cannot just think that was my money I'm putting, I don't know what will happen, we'll see once if there is something goes wrong. At least the minimum amount of due diligence, you are putting 1,000, 10,000, 50,000 rupees of your hard-earned money. You should do at least little, Google it and see where the money is going, what product is that. People will always saying 15% guaranteed return. Moment you see any person saying guaranteed return, it's the first thing that you should not go there. I think that is the first thing. There is nowhere in this world you can do guaranteed returns, and that is no such product in life which is guaranteed. So from that point of view, I think investors also have to do their homework. They cannot just think that, oh no, but no regulator is regulating it, and now my money is stuck. At least some amount of due diligence has to be done as to whether this product is regulated, whether this site is regulated, where am I putting money, what is the product, who is regulating it. Little bit of question FAQ they should put to themselves before investing.
Okay. You guys can hear me clearly back again now?
Yeah, yeah.
Yeah.
Yeah. Okay, perfect. Okay. Uh, Anil, on 18th of November, SEBI also released a notice on unregistered online platforms and banned some of them from selling unlisted bonds as well. And very recently, they released a cautionary notice on selling unlisted equities as well. They asked investors not to do KYC on these unregistered platforms, not to buy securities from them because again, SEBI will not be able to protect the investors. Do you think SEBI did fair there, or do you think they're being overly cautious with all of these instruments that people can rightly buy and hold as well? What do you think?
Yeah, I think investing in securities is a risky
Hmm.
business.
Hmm.
First, I think that is first people should understand that, and there are regulations being framed all over the world, not only in India but all over the world, as to how a company can raise money from public. That is why the regulated unlisted means what? Let's say we are talking about unlisted equity and unlisted bonds. SEBI has come up with circular saying that, and with respect to one order they have issued that the entities are selling unlisted bonds. Another circular they have issued that they should caution about unlisted equity. Let's deal with unlisted equity first, and then go to unlisted bond. Unlisted
Sure.
equity. Let's say I have a company XYZ Limited. I put on your platform AltX private unlisted shares platform, where I sell my company XYZ, say that my profit is 100 crores, my revenue is 10,000 crores, and we are growing at a CAGR of 30%, and nobody is to verify that. And I will just sell those shares to public at large, and people will buy 1 lakh, put 5 lakh, 10 lakhs. There's no protection to that money. The only way to raise money is to do an IPO, if you're going to public to raise money. Otherwise, you go to private equity, you get private equity investments. But you want retail guys, 500,000, 10,000 rupees that you want from retail, and you people want to buy this, those unlisted equity has to go through the rigorous of disclosures, and SEBI as a entity which will review those documents. Recently, there was an IPO which was a semi-IPO, where SEBI said, "Do not go ahead with that IPO, traffic on or something like that sort."
Yeah, yeah.
So from that point of view, there is a regulator ensuring that they're protecting your interest, and therefore that is why only when the process is complete, then it becomes listed. It's not an automatic listing. I press a button, listing, and listing happens tomorrow. It goes through a
Mm.
checks and balances. A market intermediary, a merchant banker goes through the disclosures. They sign a due diligence certificate that we have reviewed everything and everything is accurate and true. A lawyer signed that draft. So it's not an easy business getting yourself listed and taking money from the public. So now unlisted equity, if you offer on platforms and without any checks and balance on what disclosures are there, then why would anybody do an IPO? I can just raise money, putting those money, put my
Mm.
stocks on the platform, put my company and raise money. And what if all my claims are wrong? Investors are not protected there, right? So there is a clear
Sure.
case why this unlisted equity should not be made available to public through these platforms. There are stock exchanges, a platform through which shares can be bought and sold freely through market intermediaries like brokers.
Mm.
And those companies which are listed, they're subject to disclosure norms. Agar there's something wrong, if there's a fire in your manufacturing unit, you have to disclose immediately. Your shareholding pattern
Mm.
needs to be disclosed. Every material information needs to be disclosed. Constant disclosure, because then you can track your investment. No, no, boss, this fire is burnt off the manufacturing. Let's sell the stock. You can do that because you have that information. Now in an unlisted equity, you're buying blind, you're selling blind, you don't know what you're doing. If the company tomorrow says, I have no money, and they run away with the money, what will you do with that? There is no recourse to that. You can file civil claims and go, and they say that they have done illegal acts by raising capital, but that you know how in the judiciary work. Even if you get
Mm.
a judgment in your favor to get that money out, that money will be spent and everything will be gone anyways. So there's a clear
Mm.
case that unlisted equity should not buy. People will think, okay, Flipkart hai, everybody knows what Flipkart is. I can buy Flipkart shares. NAC hai, I can buy NAC shares. Let it be on public. But then why would NAC do an IPO? Let it sell on this unlisted equity
Mm.
So,
market. Yeah.
yeah, so on that point, like that's yes, that's the day job of a private equity fund where they
Okay.
are buying and exiting just before an
Mm.
IPO. I think the point is largely how should it be disseminated to retail investors. Anyway, yeah, please go ahead.
No, no, that's the point. You can do one-to-one transaction. I have NEC says you have, yes, you want to buy, I can say, if I want to buy. But moment you put public at large and people can buy the shares at public, then it just takes the form of a stock exchange. I think without the systems of the stock exchange, without clearing settlement, tomorrow I may pay the shares money and may not get the shares also. So who will protect you from that? There is a clearing and settlement
Mm.
mechanism under the stock
Mm.
exchange, and you get the money. You ensure once you do a transaction, you know that you're going to get the money or get the shares. So that kind of ecosystem has been built with laboriously for years and centuries together, and you can't just dismantle it by saying unlisted equity आप मेरे platform पे ले लो. So I think that is where I think unlisted equity is slightly, on a different footing, and I think any regulator will. I remember even 5, 7 years back. Now the company is IPO'd. I'll tell you about that company also, because now they pivoted. The traction career company, they used to also sell those ESOP ka shares. And SEBI sent notice to all other things. They
Mm.
pivoted. They now became a research entity, and then now they're a company which is listed company. So point is that it's not a new thing. People have done it in the past, and SEBI has come after them, so again they will come after them. So I think that's very clear in both in law. It's not like SEBI is being harsh on them. I think it's very important for investor protection. They should start shut it, because it just loses one bad apple and then the entire ecosystem can collapse. Because once you maybe invested in two three companies and got money return, and one fourth time you got unlucky, and then every single penny that you earned will go away. So from unlisted equity, that's the point. Unlisted bonds is slightly different footing, because bonds are again, uh, uh, see equity. Equity can, any company which can issue equity can just only by way of IPO, by public offerings. You have to book running lead manager, do an PRHP prospectus. But bonds can be listed even by private limited company. It can be listed even without doing a IPO. You can do a private placement and then listing. So that is a very different route to basically get the investors' interest, and to ensure that, because bonds are not corporate bonds, there is no liquidity in the market. There is not enough depth as we have in equity. So SEBI has actually created this laws to ensure that more corporate bonds get listed. And the if you see, prior to the OBP law coming into effect, each of these platforms used to sell both listed and unlisted bonds. And they went with the consultation, as Vaibhav rightly said, even before the consultation paper, they met with all the big those platforms. And SEBI took a conscious decision that if it is sold to the investors through these platforms, it has to be listed equity, because then listed bonds, because then you have an exit. You can just go on the exchange and sell. If in an unlisted bond, there is no exit mechanism. You cannot, if you are stuck with a bond, nobody wants to buy. How do you exit? Because it cannot be Hotel California where you can no way you can exit the once you invested. So from that point of view, the unlisted bonds also, SEBI was very clear when they came up with OBP that only listed bonds will be allowed to be sold on OBP. And by default, that means unlisted bonds cannot be sold on OBP. And if it cannot be sold on OBP, it cannot be sold anywhere else, because that's the platform it is. You cannot, again, the same logic for unlisted equity will apply to unlisted bonds again, because there is no ecosystem of disclosure. There is no disclosure requirement. There is no settlement guarantee scheme, because there is just demat to demat transfer. So from that point of view, again, unlisted bonds also is an area where SEBI is very clear that it cannot be sold on the market through anything. It's similar line in unlisted equity. You can do private deals. Like investor can, I as an investor, if I hold a bond, I can sell it to somebody else by doing a private transaction, but cannot create a public platform for such unlisted bonds without any, you know, uh, I'm sure there are entities who are putting it up, and they'll put the risk factors, etc. They'll put what is the yield, what is that, what security is there. But end of the day, you are on your own. There's no ecosystem protecting you of due diligence. And if those platforms have not done their job properly, people have lost money also there. Then there's nothing to, there's no going back. So that is where I think you have to be very careful on these platforms when you're buying. That's why product becomes important. There are platforms who are selling maybe OBP itself, and they're selling listed bonds there in the same platform doing unlisted bonds, which are unregulated, not unregulated, which is something I would borderline saying illegal to carry out those transactions. So not only platform, you should look at the product that you're investing in. So that's where the difference lies.
Awesome. Okay. No, very crystal clear, I think, for the public. I think Weber, Anil has already talked about the differences between listed and unlisted bond largely. But can you talk about what are the steps that you or any other OBVP needs to take to get that, if you're originating an NCD, doing a primary transaction, what steps do you need to take to make that NCD listed? Because you can very well do unlisted as well, right? Either you can't sell it to the public via your platform, but what are, let's say, the benefits for the issuer also to get their NCD listed and make it regulated for retail investors?
Yeah, see, it's a lot of the same things that Anil spoke about in detail about unlisted equity. Okay, but very broad level, listed securities or listed bonds are recognized by the exchanges, National Stock Exchange or Bombay Stock Exchange. Unlisted bonds are not recognized by any exchange. Now, the listing process, because it happens to the exchanges, the listing process takes care of all the things that Anil was mentioning, right? You have to do all your financial disclosures. There's a merchant banker involved which will, underwrite or verify the disclosures. Post issuance, so this is pre issuance, but post issuance also you have to do periodic disclosures on the financial health and how the company is going.
For
Finally,
listed bonds as well.
for listed bonds as well. Yeah. These are, so the level of corporate governance and secure and the scrutiny is of very high standards. None of this is present in unlisted bonds, and that is the key difference. And that's why what Anil was speaking about. That's why SEBI under OBBB mandates that you can't do unlisted bonds because none of this infrastructure or framework is present there. Now it goes on
Hmm.
to investor grievance redressal also. If an unlisted bond goes kaput, you don't have all these frameworks to hang back on. Then like what Anil was saying, right? That platforms have done unlisted bonds, but the problem is because it's an unregulated product, and I have seen so many platforms doing unlisted bonds without the proper disclosures about a bond offering as well. For example, bonds are not even categorized into listed and unlisted categories. Investors don't know whether it is listed or unlisted. The rating is not provided. You don't know what kind of risk you are getting into. And those are the leeways that you can take as unregulated platform and unregulated products. With OBBP and listed bonds, these are not the leeways that we can take. We have to disclose everything on the online discovery platform. These are the big differences from an investor comfort point of view, which is more important than the nitty gritties of the process. Right? And
Got it.
having said that, do unlisted bonds exist? Yeah, they exist. A large family office doing a 50 crore unlisted bond issuance, nobody has a problem with that because it is a one to one transaction and they, we believe, understand the risk in and out. The problem really lies in making into a public at large offering. Same thing what I said about equity. A private equity fund doing a pre-IPO transaction does not raise eyebrows to anybody. But the investor class is so poles apart that it is all being done for the small investor safeguard.
Hmm. Okay, got it. No, fair enough. Thank you. Um, Anil, a question that I had also written, and I think it's also asked by audience. Do you think the regulators always come late to the party whenever some sort of violation is happening? So, in RBI P2P lending, the creative interpretation of the guidelines was happening for more than 1.5 years. Even for this unlisted bonds or unregulated online platforms, it was happening for last 1 to 2 years at least. SEBI suddenly came in and said, "Oh, hey, you guys can't do it because we just don't want you to do." So, do you think they are always late to the party? They can be more proactive, or there are so many things that they need to do in the background to make a case and then finally come out in the market. How do they work?
I think it's a mixture of both. There is, of course, a regulatory inertia that you take time to react. You don't react immediately. There's always a regulatory inertia. There's even for cops. Some movies maybe cops come after a crime is committed. They can't come before. Otherwise, no crime will happen. Also, no? The point is that, of course, see the problem in these cases that SEBI also does not have the bandwidth to look into so many other thousands of things. Also, bandwidth is a
Sure.
actual problem. Now they interfere on two grounds. One, somebody complains to them, investor complains, and of late I've seen competition complaints. A competition we read, oh look at this competition is doing something that is not allowed. Ask them to shut down that product. That's not allowed. There's competition complaint, investor complaint, and third is of course when the size of it becomes bigger. If one or two on the website nobody is watching, one or two something, then they do not even feel the need to let me interfere. When the issue becomes slightly bigger, then let me interfere. So that kind of regulatory inertia is there, and as to how SEBI react also, the process also needs to be followed. They cannot just on one fine day say shut the shop. They will have to create an investigation, find all the answers, create a legal framework under which they will charge. So yeah, a bit of both. I'm not saying they're very efficient, but I'm not saying that they're very lethargic also on it. It is beyond, or at least we can put to this way, they make sure at least it does not go out of hand before anything large
Hmm.
happens. Like last time big happened was again, that was DHFL and all this bond failure. If you see stock
Sure.
market kind of issue, or people have lost thousands of because of some scam, which is SEBI's domain, is very few and far in between. And all these platforms, if you see, digital platforms have mushroomed so much in post COVID past 4 years. It is very difficult for them to track also, and they are also looking into the issues as to,
Hmm.
and because they don't want to brush aside the everything is illegal, then we should shut it. Then they give the benefit of what,
Hmm.
okay, fine, this is some a product which we should, is a genuine product, should regulate because there's a regulatory vacuum. OBP
Sure.
classic example, SME REIT classic example, where it was at that time of regulatory vacuum, and they filled the vacuum by creating laws on it. So they take,
Hmm.
sometimes may not, they don't want to shut it down because then they may think that I could have regularized and created a product out of it, which is actually beneficial for the investors at large.
Hmm.
So I think that is why they actually are more reluctant to take immediate action. They just wait for and watch as to what they're doing and whether we can regularize it. But for something like an unlisted equity and all, they are very, very clear. I think they will, because they have done it in the past also. And since, see, point is that sometimes you just do, because what happens is, let's say let's say I'm just taking any random name, ABC platform which offers, let's say, brokerage also. They offer AIF product also, and also offer one unregulated product which is not, should not be, let's say, unlisted one. Then you cannot say
Hmm.
shut the platform. Then you have to basically, people have to go, okay, when these guys are doing that also, ask them to shut that. So there's a bit of, to fact finding also is required, and that takes some little bit of time. But yeah,
Sure.
overall you can say that it's neither too good nor too bad.
Okay. I guess SEBI also needs to find balance between where do they need to put their
Yeah.
resources as well and also take action. Okay, Anil, any final advice for retail investors? Because I know even after seeing this podcast, a couple of them will still go ahead and invest in unregulated products to earn that extra 1 to 2%. Any final advice for them that about
Yeah,
investing in such unregulated products?
see, I think classic example of unregulated is crypto. People have made so much money in crypto now, to say that, "Kid, don't invest. If you lose money, people not buy irrespective of what you say." Because
Hmm.
nothing excites people, because investing is made for making profits. But more in the case which is, see, crypto is again another global reach, and it's very difficult for one company to. But the point is, it's the protection of the investor is where you need to understand, if what is something wrong, how do you get that money back?
Hmm.
And that is where you have to understand what product you are buying, what is the risk you are taking, whether that risk is good enough that if I lose my all my money, I'll be happy with it. Then you go ahead. I am not going to say them, say, don't invest anything, don't do anything, sit at home. All I'm trying to say is that you should allocate your risk properly. If you're unregulated product, you should think at least that, boss, I have the risk that if it goes 10,000 rupees, I can take 10,000 rupees of risk, where if it goes 10,000, I will still not get sleepless nights, I can sleep well. So I think from that point of view, you should approach anything which is unregulated, which you think, first check. I think first thing you should do, where you are investing, check your product, then see whether it's regulated, which is the entity which is regulated. Is the entity which is offering is regulated, the product is regulated or not. So, because if you see, all of these may say that it is in compliance with Companies Act and blah and blah, but you should always see whether this is SEBI registration, RBI registration number given, because that will
Hmm.
show that person is registered or not. Look for that. That is one first thing you should
Hmm.
look at. And the second thing you should always look at is, if uh, what is the background of these people, because the point is that there are certain platforms which are big in size and big in number, but doing some unregulated stuff. You're still more secure there because they have the ecosystem to protect, because they're not fly by night operators. Because
Hmm.
I could have said that SME don't invest because that is illegal, because past, before it became regularized, because there'll be certain products which may be in the borderline. So I'm not that kind of guy who said you don't take risk, because alt by definition is taking risk. But
Sure.
you should know where you're taking risk, because every single, even equity you buy, you can, which is the best regulated product, DHFL triple A bond, you can still lose the entire money. So
Sure.
there's no guaranteed money. And also one keyword, if somebody says guaranteed return, you should never go there, because that means that person is cheating you.
And
Uh,
also tax free. I'll add tax free guaranteed
tax free, yeah,
returns.
nothing is tax free. So I think that those are things that you should look out because it's your own money. You should not be
Mhm.
casual about it. That's all.
Sure. Okay. No, makes sense. Weber, anything to add on that point before I move on to audience questions?
Yeah, see, I think our and what Alt is also doing as an awareness platform, right? The first thing is, or my aspiration is that people at least understand the difference between regulated and unregulated. I think there's so much cloud around it that people still, and fairly so, people don't understand what regulated versus unregulated means, and then the categories and so on and so forth. Once that is done, then what Anil said is right. You assess your risk appetite and go for unregulated products as well. I think there is a third category which is illegal. Don't go there. But if you can stay in the second category, which is unregulated, if you have the appetite to lose money and not lose sleep over it. But people don't understand that. People go for that unregulated product with the hook of guaranteed return and then have sleepless nights when something goes south. I think that understanding of differences in these two or three categories is very, very important. If I have to personally advise, then of course, grip stance is clear. We are dealing with a lot of retail investors. I think there's a narrow risk spectrum where people should play for the most part of their portfolio, and which is this which squarely falls into regulated products and can still generate your 8 to 13% returns. Um, yeah, that would be my last comment.
Okay, got it. No, thank you. I'm done with my questions. I have a couple of audience questions from the live feed on YouTube. So I'll pick them. Uh, Anil, probably you can answer this one. So GRIP also sells unlisted SDIs. These are also unlisted products. How are these allowed? Uh,
I think
would you
Vaibhav should
happen to
answer
know
it.
more
I
on
think
that?
no. I think Vaibhav
Weber,
let
Weber,
Vaibhav take it. Yeah,
you take
I'll
it.
come back after that.
I don't know what you want to hear, yes, so that you directed this question to Anil and not me.
Hmm.
Anyway, jokes apart. So, see, unlisted SDIs are governed by RBI. So, these are regulated by RBI. So, this is not an unregulated product. I think the only thing is that OBPP regulation, which I think probably didn't say, the regulation says that you can offer SEBI regulated products, but also regulated products regulated by other regulatory agencies like RBI, IRDA, etc., etc. So this comes under that category where unlisted SDIs are governed by RBI and so can be offered on the OBPP platform as a regulated product.
So unlisted
Weber,
SDI is
in
a
that case, can you also? Sorry, go ahead, Anil.
so unlisted SDI is a structured product. It comes out of a regulated RBI law circular, and how you can create that SDI is a very well defined platform. This thing, bond is slightly different. Bond is just an issuance of basically saying that there's a debt owed. I owe you 10,000 rupees. This is the bond, which is very different from a structured product, which is a pool of assets, and then you create a structured debt instrument, which is a very well oiled machinery. So you can't compare SDI and bonds and equity.
And if the even the structure follows RBI guidelines, the pool we select follow the RBI guidelines. So it's a through and through regulated product.
Another question, and I'll keep it open-ended. Whoever wants to pick it up. How does SEBI actually regulate OBPP platform? For example, if any investment opportunity is shown by OBPP platform, then how is the truthfulness of that opportunity verified by SEBI? Anil, do you want to take that?
I think all listed, the process of listing itself takes care of that because once you have to list by private placement or public offer, but mostly this will be private placement, you have to file the placement document with SEBI. And these documents are verified by a ranger or a banker. And they look into due diligence, they sign off on the document, and these documents are filed with market regulator, just like an IPO. When you file a much more lengthy document in IPO, but a much more abridged version in a private placement of debt and listing. So these documents come from a which are verified by a market intermediary, signed off on that, and then reviewed by the market regulator, and then get posted on OBP. So what OBPs are posting, they are coming right from the they see the master documents, the term sheets, and all the security documents, whatever if there's a mortgage or any other, security documents under which these loans are secured. Those parts are adequately covered right from the mother documents. So from there, from the OBV perspective, they are actually the platform which is helping the investor to buy those bonds, and they disclose whatever is disclosed by these issuers on the platform with an ease of reading. Otherwise, anybody can buy the same bond on the exchange, but the only thing is that the market may not be there. So point is that, but they will not have the details also of each of the bond. What is the security against the bond? When will the bond mature? What is the percentage of interest they're offering? So all those things they do their own vetting also basis the disclosure documents filed by the issuer, and they put it in a concise and reader friendly manner to their users who come and buy on this platform. So that is how the authenticity is taken care of. Vaibhav can add more for sure.
No, I think Anil covered it beautifully. I think maybe just last thing I'll add, which is slightly broader than this question, is that you just look at the process. Okay, there's an originator. Then once we structure the product is regulated and structure is governed by guidelines. Then it goes to a rating agency. So another institution gets involved. Rating agency rates the product. Then it goes to the exchange for listing. So the exchange gets involved, and then the transaction happens over the exchange. So the involvement of so many governmental or regulatory bodies make the whole framework very very robust. None of this is present in your unregulated products, right? You can use your own creativity and do, which may or may not be super risky for the investor.
Okay, got it. We have a question for you specifically from Nagaraju. Uh, so for investment in SDI financial product in GRIP on the GRIP platform, what is the minimum amount for investment and what is the tenure for investment?
Yeah, so minimum investment in bonds start at 1,000 rupees. Minimum investment in SDIs are at 1 lakh rupees. The tenure, we have opportunities with tenure ranging from anywhere between 6 months to 36 months. So you can choose the tenure that you would like to while investing. So it's a very large spectrum of tenure and yields.
Okay, got it. Anil, a question. Recent SEBI circular, the caution notice on unlisted shares. Why did SEBI not take any action against specific platforms? Because as per this user, the practices are widespread in the market. I mean, NSE shares are sold like
Yeah.
sale
Vada
that
pav.
is going on in the market. So why is SEBI not named and shamed any particular platform or any particular broker when, why just issue a cautionary
See,
notice?
broker is different. Brokers don't like my broker will call me कि boss I have NSE shares you want to buy. That is permissible. Private transaction, no, unlisted shares are permissible. It's not like private transaction cannot. I mean, what happens is that when you make it public, the platforms. So coming to the question,
Mm,
why SEBI has not come after the platforms? Now,
mm,
if they may be multiple reasons. They may not want to take action. They said, let me send a caution, let them shut it down there. I don't want to like jeopardize their career by shutting, because once an order
mm,
comes, that investor also, that platform also, basically everything sets, and it's very difficult to raise capital and do another business. If caution can stop them, let's give them an opportunity. B, they may be still under investigation. Some platforms will be still under investigation, and they may come up with a jumbo order clubbing all of them, like we did for the online unlisted bonds. So you never know.
mm.
Maybe an order is coming through because they thought, let me before at the time when I'm investigating, during that time only, let me just pass a cautionary tale so that, because the primary interest is to protect the interest of the investors. I may take action against that individual or the entity who is doing something wrong, but that does not solve any purpose. That because that may take 6 months for me to complete the investigation and pass an order. Uh, in the meanwhile, I should at least caution the investors because you at least don't fall in the trap. So I think there may be two reasons. They may be still investigating. They may get an order very soon, or they may just want to give an opportunity and meanwhile cautioning the investor because please hold your horses. Please look at what you're doing.
Got it. Okay. I'll take one last question since we are almost out of time. Question is from Somnath. What's the point of crediting unlisted bonds into demat account when the product itself is unregulated? I think it's a different uh, thing altogether, Somnath. I'll quickly answer that. I mean, if you it's a security at the end of the day. Security needs a place to be held. Either you do it in the physical form, or either you do it in the dematerialized form. We are saying it's unregulated. It's not illegal to hold any unlisted bonds per se. So if it comes into a demat, actually that's a good thing. That's yeah. I mean, there's no linkage here from regulation point or getting into demat point. Would any one of you would like to add anything more on that? No.
So see, just one point on this. So unlisted bond, as you said, is a security which will go and sit in your demat account. However, there is a counterparty risk when you do unlisted bonds here because they don't happen through the exchange and they happen through over the counter mechanism. It is more like Yash telling Anil that hey, you transfer me the money and I will settle your securities, and it's a one-to-one transfer. So that counterparty risk uh, might exist in these over-the-counter trades.
Okay. Awesome. Okay, we're out of time, so I would really like to thank the audience who joined this at 3:30 p.m., middle of a working day, I suppose, for most of them. And thank you so much to Anil as well for making the time out again from his busy day. And of course, you, Weber, you and I are regulars, so we have that understanding. But no, thank you so much for sharing your insights transparently and also effectively with the audience. In the audience, if you guys have any more questions, you can reach out to me at yash@thealtinvestor.in or join the alt investor community if you're not a part already. We have Weber also on the group, so a lot of people who can answer your questions there directly as well. And if you like the webinar, do share it with your investing audience so they are also aware of the differences between regulated platforms and unregulated platforms, and then they can probably decide what works out best for them. Uh, Thank you so much. Thank you, Anil. Thank you, Weber. Pleasure hosting you today.
Pleasure is all mine. Thank you, Yash. Thank you, Vaibhav. Great having you guys.
Thank you. Bye.
Thanks.
Okay,
Bye.
I've stopped the recording, but